Monday, all three of our levels got retested and rejected, and I told you the only thing that overturns a rejection is a close above the line that holds the next day. Well, Tuesday the market delivered that close. QQQ finished at almost 709, back above 7000. SPY closed at 748, inside the wall we needed, and semis went vertical, up 4.5%, straight through the 567 lid that we discussed. Today was the hold test and it passed. SMH gapped down to the old level, held it, ripped 20 points to tag 591, the door of the vertical zone I've been calling out for 2 weeks, and closed at 586.91, green, 3 points shy of the zone. QQQ never touched 700 all day, so this is a great thing to see. Looking at the markets as a whole, we can see that the Dow overall closed pretty much flat. NASDAQ closed down 0.57%, the S&P closed down 0.14%, and the Russell 2000 closed down almost 1%. So we didn't get the exact follow through we needed, but the market did not fall through the floor either. The issue that's really putting pressure on markets is oil. Crude oil has jumped up another 2.72%. And barrels of oil are going now for $86.63. The closer we get towards the $100 mark, the more pressure that will be put on to high beta equity names. And the obvious reason that oil continues to climb is because the Iran war seems to be far from over. Trump is now threatening to bomb a bridge and power plant within Iran, and this comes at a time where we thought that the Iran war was coming to a close. If he is continuing to threaten to bomb infrastructure, we can see continued pressure on equity markets, along with oil rising back above $100. The overall national average for gasoline is above $4 a gallon once again, so this is putting pressure on the consumer. Let's take a look at the QQQ, the NASDAQ 100. We can see that overall today price rejected from both the 8 and 50 EMAs. We did love to see a close back above 700, but truly the bulls need to get back above both 8, 50, and 20 EMAs. The 713 is still our line in the sand, and I would call that our bullish pivot. If we could get price to come back above 713, mount it, reclaim mount, treat it as support, and then bounce, this is our only path forward going back towards all-time highs. We're going into the earnings season. We can see that the MACD is currently in position to cross bullish for the first time really since early June. So Tesla earnings are out after the bell today, along with Google and IBM. So if big tech can report some good earnings, we could see the next move higher on here. But for the QQQ, the main levels I'm watching is the 700 level holding, 713 being reclaimed for a move higher, or if the 700 level does not close, we must hold strong at the June low like we did 3 sessions ago. We can see that that level is 686. Now let's take a look at the SPY, the proxy for the S&P 500. We can see that today was mostly a flat day with price closing down 0.12%. We were closed once again under the $750 psychological level, something that we did want to see, and a level reclaim that is very important. All of the moving averages are very bunched together. The 8 and the 20 EMA reside at roughly 748 to the 750 level, but overall not bad. I mean, the MACD is in a position to cross bullish just like the QQQ. We can see that RSI is right at mid with currently at 51, and we're still making higher lows currently. We didn't lose the 50-day moving average, which is a good sign that bulls can still be in control and institutions are still involved. But overall, you do want to see us get back above the 8 and the 20, and this will show short-term bullish price action moving forward. Because if we can get above 750, we're literally only 2% from all-time high at 760. Now let's take a look at the SMH, the ETF for semiconductors. Today, a slight gain of about 0.5%. SMH was able to gain $2.83. We were able to close above the 581 level, which is a good sign for bulls, but we did reject at the 20 EMA. which currently sits at $593.75. The best possible scenario for semiconductor bulls would be a reclaim of the 600 psychological level. So we're very close there. We almost tapped that earlier this week. Um, the MACD is also in a position to cross back to the bullish divergence, along with RSI being smack in the middle at mid at 48. There's still a lot of buying pressure that can be still had to push price higher. We just need some continuation here, and with mega cap earnings after the bell today, we could see pressure continue to melt up and these markets begin to move in the next leg higher. We've really been within a trading range these last 6 to 8 weeks, so we do need that catalyst to push us, and that could be the earnings season for us very well.